Hey everyone, and welcome back. Today we're going to do a deep dive into a company that's really going through some changes.
Yeah,
Raymond Ltd.
that's right.
You might know them for their fabrics, but they've actually kind of moved away from that, haven't they?
Yeah, they've demerged that part of the business, and
That
they're now really focused on real estate and engineering, which is
huge change.
it is a pretty big change.
Yeah, and that's what makes it so interesting to look at, right?
Yeah, exactly.
So we want to see, is this a new strategy? Is it paying off?
Yeah, are they making the right moves?
And we've got some pretty good sources, I think.
Yeah, we've got a press release, we've got their full financial results statement, and a really nice investor presentation.
Oh, excellent.
So
Lots to dig into.
lots of detail to get into.
Yeah.
So give me the big picture then.
Okay, so the headline is,
Yeah.
I think it's safe to say this reinvention is working.
Oh, wow.
If we just look at their Q2 FY25 results,
Oh, right.
their revenue has jumped by 115% year on year,
Wow.
which is pretty impressive. That is,
And it's hit 11 euro, 101 crores.
okay?
And then their EBITDA,
Yeah.
which is earnings before interest, taxes, depreciation, and amortization.
Right.
That's grown by 75% to 172 crores.
Those are
Pretty.
some
Woo.
seriously impressive numbers. I mean,
Yeah.
to exceed expectations during this kind of big changeover,
Yeah.
it's
It's not easy.
not easy at all.
Yeah.
So what do you think is behind this success?
Well, I think, it's not just luck. They're making some smart strategic decisions.
Yeah.
And they're executing them really well.
Let's break it down a bit then.
Okay.
Starting with real estate.
All right.
They've reported 135% revenue growth in this segment,
Yeah.
reaching 571 crores.
Yeah.
So
Yeah.
what's driving that kind of performance?
Well, a key part of their strategy is speed, so they're focusing on quick construction and sales,
Right.
which means they can generate revenue much faster.
Makes sense.
And this is especially smart in the real estate market because it can be volatile.
For sure.
So by securing that revenue early, they're minimizing their risk.
Yeah, that's a good point. And they're not just building, anything. They're building some pretty interesting things.
Yeah, for sure.
Like that Park Avenue High Street reimagined,
Yes.
which is a new retail smooth and thane.
Yeah.
And I read it's the first of its kind in the area.
Yes, it is. And that's a very deliberate part of their strategy. They're not just building houses, they're building a whole lifestyle ecosystem.
I like that.
They're thinking about, retail spaces attract people. It boosts the property value.
Yeah.
And in the end, it enhances the living experience for the residents.
So they're building a community, not just buildings.
Exactly.
And it seems to be working because they've achieved a booking value of 562 crores this quarter.
That's right. And projects like the 10X ERA and the retail shops in Thane, and then there's the Address by GS project in Bondra.
Right.
They're all driving that success.
Yeah. And there's more to come, right?
Oh, yeah.
Yeah.
A lot more. Their current real estate ventures have a potential revenue of over 32,000 crores.
That's incredible.
That's a lot of possibilities.
It really sounds like they've hit on something special with their real estate strategy.
Yeah.
But what about engineering?
Engineering's a slightly different story.
Right.
But it is still promising.
Right.
So they have more than doubled their revenue year on year, hitting 443 crores.
Okay.
But we should remember that includes their acquisition of Maney Precision Products.
Yeah, the Maney acquisition. I was wondering how that was going.
Yeah.
Are they seeing those benefits they were hoping for?
It's early days, but the signs are positive. Their domestic market performance has been very strong, especially in categories like flex plates, ring gear, and shaft bearings.
Right.
So it looks like that integration is going well,
Yeah.
and their product portfolio is definitely benefiting from Maney.
That's good to hear. But I do remember there were some challenges with their export business.
Yes, that's right.
Is that still a concern?
Yeah, unfortunately it is.
Good.
They're facing headwinds because of that weak global demand and the geopolitical issues that are still going on.
Yeah, it's a good reminder that no matter how good your strategy is,
Yeah.
sometimes those external factors,
They can really have an impact.
they really can.
Yeah.
So we've got a booming real estate segment
Yeah.
and an engineering business with potential, but also facing some challenges.
Yeah.
So what's the overall picture of their financial health then?
Well, this is where it gets really interesting.
Okay.
They have a cash surplus of 685 crores.
That's a lot.
It is, and it's a very positive sign for a company that's in this growth phase,
Right.
especially because they've just gone through that big demerger.
I'm still not quite clear why that cash surplus is such a big deal. Can you
Sure.
explain it?
So think of a company's cash flow as oxygen.
Okay.
It's essential for them to survive and to grow.
Right.
Having a health surplus like Raymond's means they can breathe easily, they can weather those economic storms,
Yeah.
and they can grab opportunities when they come up. And it also means they can make big moves without relying on a lot of debt.
So it's not just about having money in the bank then.
No.
It's about having that freedom
Yeah, it's about options and flexibility.
to kind of choose their own path.
Exactly.
I like that. And this cash surplus really shows their financial strength.
It does.
And that they've been thinking strategically.
Definitely.
And that kind of smart approach is reflected in the way they're managing their segments.
Yeah.
Especially in real estate.
Yeah. Their real estate segment is doing really well.
It is.
571 crores in revenue this quarter.
And that strategy of building correctly and selling quickly, that's clearly working.
Yeah, it is. But what makes them really stand out is that focus on creating these lifestyle ecosystems.
Right.
Remember that Park Avenue High Street Reimagined project in Thane?
Yeah.
That's not just a random retail space. You know, it's designed to be part of those residential projects to add value and to attract that premium clientele.
So they're curating an experience rather than just constructing buildings. And it's paying off because that booking value of 562 crores this quarter shows that people really buy into that vision.
They do. Their success in real estate isn't just about building fast. It's about creating those spaces that people really want to live in.
Now, on the engineering side, things are a little more complex.
Yeah, a bit more nuanced.
They've more than doubled their revenue year on year.
Yeah.
But we've got to remember that's with the Mini Precision Products acquisition in there as well.
That's right.
How is that integration actually going?
Well, if you look at their performance in the domestic market, it suggests it's going pretty well.
Okay, good.
They're seeing strong growth in some quite specialized components, things like flex plates and ring gear and shaft bearings.
Right.
And that suggests that Mani's expertise is really complementing what Raymond already got.
So domestically, things are looking pretty good.
Yeah.
But you did mention earlier those export challenges.
Yeah.
Are they still?
Unfortunately.
Yeah, still there.
Those global economic headwinds and those geopolitical uncertainties are still having an impact.
Yeah, it's that reminder again, isn't it? That even companies with really good strategies,
sometimes those external factors,
they can really get in the way.
Exactly.
So we've got this really great real estate segment. And engineering is showing potential, but it was facing some hurdles.
Yeah.
So overall then, how would you describe their financial health?
Well, I think overall it's a really positive picture.
Gotcha.
They've got that healthy cash position.
Yeah.
Real estate's doing really well. And the engineering business has got potential.
Despite
the challenges.
those challenges.
Yeah, they're not in a bad position at all.
No, they're not. And in fact, I think to really understand their success, we need to go a bit deeper.
I agree. Let's dig into those financial statements.
Let's do it.
Like archaeologists unearthing treasure.
I like it. Welcome back, everyone.
Back for more.
I'm still thinking about those impressive revenue figures we talked about earlier.
Yeah, it's pretty impressive, isn't it?
Yeah, but as you know, the numbers, they only tell you part of the story.
That's right. We need to look a bit deeper.
Yeah.
Kind of like, archaeologists unearthing those hidden treasures.
I like that.
And I think a good place to start is their financial statements.
Okay, let's put on those financial detective hats then and see what we can uncover.
All right, so let's go back to that cash surplus of 685 crores.
Yeah.
It's not just a random pile of money.
No.
It shows how disciplined they are with their finances.
Yeah.
Especially because they've just done this demerger.
You know, I'm still not 100% sure why a cash surplus is such a big deal.
Sure.
What does it actually mean for a company like Raymond?
Okay, imagine a company's cash flow. It's like oxygen. It's essential for them to survive and to grow.
Right.
A good, healthy surplus like Raymond has, it lets them breathe easily.
Yeah.
They can get through those tough economic times.
Yeah.
And they can take advantage of opportunities when they come up. And it also means they can make those big moves.
Yeah.
Without having to rely on lots of debt.
Ah, I see. So it's not just about having that money in the bank.
No, it's not.
It's about having choices.
Exactly.
The freedom to kind of chart their own course.
That's it.
And that cash surplus really does show that they've been smart.
It really does.
And strategic.
Yes, it shows financial strength and strategic foresight.
And you can see this smart approach in how they're managing their different parts of the business, their segments.
Definitely.
Especially in real estate.
Yeah. Your real estate segment is doing amazingly well.
It is 571 crores in revenue this quarter.
Yeah. And it's clear that their strategy of building and selling quickly, it's really working.
It is, but what's different about what they're doing compared to other real estate companies?
Well, one of the key things is that focus on creating these lifestyle ecosystems.
Right.
Remember we talked about Park Avenue High Street Reimagined in Thane?
Yeah.
That's not just a retail space, you know?
Yes. Right.
It's designed to work with their residential projects.
Yeah.
Add value and attract those premium buyers.
So they're really going beyond just building.
Yeah.
They're creating a whole experience.
Exactly. And that's reflected in their booking value.
Yeah, 562 crores.
Yeah, this quarter people are buying into that vision.
They are. And that shows, you know, that their success in real estate is about more than just speed.
Yes.
It's about creating those spaces that people want to live in.
Spaces that cater to people's lifestyles.
Now, engineering is a bit more complicated, isn't it?
Yeah, it's a bit more nuanced.
They more than double their revenue.
Yeah.
But we've got to remember that includes the Maney Precision Products acquisition.
Right.
How is that integration actually going?
Well, if you look at their domestic market performance, it suggests that the acquisition is working. They're seeing strong growth, particularly in things like flex plates and ring gear and shaft bearings.
Right.
And those are specialist components. And it shows that Maney's expertise is really adding to what Raymond can offer.
So the domestic market's looking positive.
Yeah, it is.
We did talk about those export challenges earlier.
Yes, we did. Are those...
Unfortunately, still a problem.
The global economy and those geopolitical uncertainties, they are still having an impact.
It's that reminder again, isn't it?
It is.
That even when you've got a good strategy, sometimes things
outside your control.
Things outside your control can really affect you.
They can.
So to sum up then, we've got a real estate segment that's booming. Engineering showing potential, but facing those hurdles.
Yeah.
Overall, how would you describe their financial health?
I think overall it's a really positive picture. They've got a healthy cash position.
Yeah.
Real estate is doing extremely well.
Yeah.
And engineering's got potential
Despite
those challenges.
The challenges.
Yeah, they're in a good spot.
They are, but these are just snapshots in time, aren't they? The real test is going to be how they keep this momentum going.
Yeah, how they adapt to the changing business landscape.
Exactly. And speaking of the future, we've seen how strategically they've managed their finances, those different parts of the business. But where do they want to go next?
Good question.
What are their big ambitions?
That is the million-dollar question.
It is. And to try and answer that, I think we need to shift our focus.
Yeah, from the present.
From the present to the future.
To the future, and explore what might be next for Raymond Ltd.
Let's do it. All right, so let's put on those futurist hats.
Yeah.
And try and look into that crystal ball.
Okay.
We've seen how Raymond Ltd has managed this transformation so well.
Yeah, they have.
But what could the future hold for them?
Well, if you look at what they're doing now, one possibility is that they just carry on growing.
Yeah.
You know, dominating those segments that they've chosen.
Yeah.
They've got the money.
They do with that cash surplus. And they've shown that they can really deliver on their strategies.
Exactly. And they've got those strong foundations.
So you think they could become even bigger in real estate?
Yeah, I think that's definitely possible.
Yeah, maybe even more ambitious with those lifestyle ecosystems they're creating.
Yes. Imagine Raymond Ltd becoming the name for premium living across India.
Like the gold standard.
Yeah, and they could really attract those buyers who want more than just a house.
Right.
They want that community. They want that lifestyle.
Yeah, that experience.
Exactly.
And with their engineering business, could they use that Maney acquisition to become a really big player in some of those growing sectors?
Potentially, yeah.
Like electric vehicles or aerospace.
Yeah. The demand for those technologies is just going to keep increasing.
It is.
And Raymond Ltd, with those extra capabilities from Maney, could be in a good position.
Yeah, to meet that demand.
Yeah.
Okay, so one scenario is growth and dominance. But could they do something completely different? Surprise us.
Yeah. Another scenario is that they diversify.
Okay.
You know, they've got a strong brand. They've got the money.
Yeah.
So they could use that to move into new markets, areas like hospitality maybe, or infrastructure development, or even technology for smart cities.
So instead of just focusing on what they're doing now, they could branch out.
Exactly. Spread their wings a little bit.
I like that. And that could help them to manage risk, couldn't it?
Yeah, and it could open up new revenue streams.
But diversification can be tricky.
Oh, it can.
It's not just about following the latest trends.
No, it's about choosing the right markets.
Yeah.
Making sure those new ventures fit with what they're already good at.
So they need to be really smart about it.
Yeah, their decision-making will be tested.
Yeah.
They'll need to analyze those markets, think about their own capabilities.
And really think carefully about where to invest.
Exactly.
Okay, so we've got growth, we've got diversification.
Mm-hmm.
Is there a wild card out there?
Oh, there's always a wild card.
What could that be?
Well, imagine them going international.
Oh, wow.
Partnering with global companies.
Taking their expertise beyond India.
Exactly. Or maybe they become a leader in sustainability.
Yeah.
You know, setting those standards.
For their industries.
Yeah.
It really does feel like they could do anything.
It does. They've got a solid foundation, and they've got that financial freedom.
Yeah, to pursue all these different options.
And that's what makes them so interesting to follow.
It does.
They're not afraid to adapt and evolve.
So as we wrap up this deep dive into Raymond Ltd., here's what I want you to take away.
Yeah.
Don't just watch what they're doing. Get involved, engage with their story.
Ask those questions.
Yeah, challenge those assumptions.
And come to your own conclusions.
About their future.
Exactly.
The business world is constantly changing.
It is.
And the companies that do well are the ones who can change with it.
Yeah, the ones who can adapt and innovate.
And Raymond Ltd. is definitely on that path.
They are, and it's going to be really exciting to see where it takes them.
It is. Well, that brings us to the end of our deep dive.
I hope you enjoyed it.
We hope this has given you some insights into Raymond Ltd.
Yeah.
And maybe spark your curiosity to find out more.
And until next time,
keep learning.
Keep questioning.
And keep diving deep into the world around you.